I know that many of you all know her. She has more than 20 years of experience in the commercial real estate industry, and throughout her career, she's invested in and loaned on CRE assets on behalf of large pension funds and institutional investors. Since 2009, she served as both co-founder and CEO of Basis Investment Group, a multi-strategy commercial real estate investment platform and lender that acquires and originates a variety of senior mortgage loans, preferred equity, and joint venture equity positions on behalf of its investors. Under the leadership of Tammy Jones, Basis has succeeded in closing over $5.1 billion in multifamily and commercial real estate debt and equity, as she would say, equity related investments across the United States. She currently serves as chair of the board of Veris Residential, is the chair of the Real Estate Executive Council, a member of the President's Council of Cornell Women, and a member of the Executive Leadership Council. She's also on the board, the advisory board of NYU's Schack Institute of Real Estate, and is the vice chairman of Basis Impact Group Foundation, which is a nonprofit organization dedicated to creating a pipeline of women and minorities in commercial real estate. She is well decorated in honors. She was named as one of Real Estate Forum's best bosses in 2023, this year, recognized among Savoy Magazine's most influential Black corporate directors in 2021. She was also selected as one of Crain's New York Business's notable Black leaders and executives of 2021. She holds a BA in economics from Cornell University and an MBA with a concentration in real estate finance from the J. Mac Robinson College of Business at Georgia State University. So welcome, Tammy, and thank you.
Thank you so much. I'm so excited to be here. Thank you, Cure, for having me, and can't wait to have what's going to be, I hope, a very fun fireside chat.
I know it will be. And next, I want to introduce Kirk Sims. He's the head of the Texas Teacher Retirement System's Emerging Manager Program. Since being established in 2005, TRS has committed over $5.9 billion to one of the largest programs of its kind, and is one of the largest programs of its kind. An additional $4.6 billion has been invested directly with EM program graduates. Since Sims joined TRS on March 1st, 2019. Before joining TRS, he served as senior investment officer for the Teachers Retirement System of the state of Illinois, where he had oversight and management responsibility of a $750 million evergreen pool of capital designed to identify and invest in emerging investment managers across all asset classes. Sims is a CFA charter holder, which we all know is a hard designation to obtain. He also has an MBA from Columbia University, and he has a bachelor's of business administration from Howard University. So welcome, Kirk.
I am excited to be here. I welcome the opportunity to have a conversation with the members of the organization, and I get to talk with Tammy, so life is good.
Definitely. So now what I'll do is just turn the floor over and give Tammy some time for you to talk a little bit about Basis and what you all do, and then we'll turn the floor over to Kirk to talk more about TRS, and then you guys can start to engage and initiate the fireside chat. So I'll turn the floor over to you, Tammy.
No, thank you. And so you described a bit about what Basis does, so I don't want to repeat everything that you said, but just essentially Basis is a private equity investment management platform that invests and lends across the capital stack in commercial real estate. And that means that we have strategies on both the credit side as well as the equity side. And our whole goal is to invest capital across the capital stack to get the best risk-adjusted returns for our investors, like Kirk. You'll hear a little bit about our story since he's one of my investors. So Basis is, all the deals that Basis does are all collateralized by commercial real estate assets across the country. And it's we'll hear more about that, but I want to get to our fireside chat, and I'll kind of work some more stuff in about Basis. But if you need capital, both on the debt and equity side, Basis is a great shop that hopefully you all consider. So why don't you go, Kirk, and give some, and then we'll get into more of the meat in our conversation, I think.
Works for me. So the Emerging Manager Program at TRS has now hit its 18th year. The program has been a high-performing program for the organization. We have built relationships. We have 12 graduates that are currently managing capital for us. We invest in private equity. We invest in real estate. We invested in infrastructure and also the public markets. The program invests for funds 1 through 4, and we look for firms that are $3 billion or less. We partner with Grosvenor Capital Management as an extension of our staff for our private markets. So that includes real estate, private equity, and infrastructure. And we partner with the Rock Creek Group for our public markets. In the end, what we're trying to do is build relationships that can scale with a plan as large as TRS at $180+ billion. Scale is important, but we give you the runway to build that scale. But in the end, we're trying to find strategies that can be somewhere between $750 and $1 billion that will allow us to then hand off to the broader trust and be able to write a normal size check for TRS. In the meantime, when you're in the family, as I call it, we work hard to be a good partner. We will do reference calls for you. We will actively try to help you build that AUM. We give you advice. We give you advice on whether this looks good in the pitch book, or is that conversation that you're trying to have, how can we assist you in that conversation with XYZ trust or pension? So in the end, it is a situation that if you have capital with us, we work with you as part of the team. If you don't have capital with us, we still try to engage at multiple stages via conferences, via chats like this. We host the largest emerging manager conference, I think the largest free emerging manager conference in the country, virtually. And so you're welcome to join that as well, where other allocators will also attend, and allows you to get an introduction to them as well. So with that, I will stop, and we're going to have a great conversation with Tammy.
That's great. So first of all, I am so excited to be here with my friend, my investor, and actually, one of my advisors. And we'll talk a little bit about kind of along the way, Kirk talked about some of that advice that you get. But I want to get upfront and close and personal with you, Kirk, and I want to hear your story from the beginning. Okay. How did you even get into this business as one of the few African-American men in the space that's out there putting capital out, big billions of dollars? How did one find their way here? Yeah,
that's a great question. And honestly, I think I have the great financial crisis to thank for where I'm at now. So when I came out of Columbia, I went to work for a boutique asset management firm that was at the time named Brinson Partners. Gary Brinson, if anybody remembers from grad school, the Brinson attribution, that was Gary Brinson, one of the smartest people I've ever met. Wow. So I went to work there and spent a couple of years there. I was part of a fellowship program. So it was just like, here, learn your way around. Figure out what it is that you do. So I started at one of the best asset management shops in the country. I went from that asset management shop to a much smaller asset management shop, an emerging manager, Thomas White International, and ran the operations team there. Went from there to a retail asset management shop. So you can see that my early background was asset management, which I think is extremely important when I'm dealing with managers, because that's my background. That's where I learned my early parts of the business as an asset manager. So great financial crisis comes along, everything changes. Finally find employment again, and I had a choice to stick with asset management, which is what I was doing with one of the local banks, or I could go to Prudential Retirement and work on their manager of manager platform. That wasn't in Chicago. That was in Hartford, Connecticut. But I took that risk because A, it was Prudential, and that's one of the biggest, most important firms in the country. And B, it was a pivot, which is I never worked on the other side of the table. And I thought, you know what? opportunity to change. And that led me to the path of where I'm at now of managing capital on this side of the table. Eventually left Prudential to go to Illinois Teachers, and now I'm here at Texas Teachers.
So what I love about that story, and hopefully the audience is hearing, is, being able to understand where you need different experience, asset management, retail, being on different sides of the equation, understanding. Now that I understand why you understand us as managers on that side really, really well, because you have a good ear for that. But also understanding that, looking at risk differently and the foundational elements of that. And so I think, that's a great story. I love to share our story, and it's going to be a quick one, but one of the things that, Kirk mentioned in his opening remarks was about going to different conferences. And there was this big conference called the Consortium.
Yes.
Renee Griffin, superstar sister in the space, used to, she now works for Grosvenor, who's actually our partner. So it's like connect the dots. But she had one of her conferences, was on the West Coast, and I attended, and I literally bumped into Kirk in the hallway at the conference, gave him and all you guys better have an elevator pitch, gave him my 3 seconds. It was enough to have him say, you know what, but let's talk. We talked, eventually flew to Illinois, which is where he was at the time, and had a great meeting, got on an airplane, true story, and sent an email to Kirk that said, killed it. I'm definitely going to get that money. And I thought I was sending it to my husband, Kirk Sykes. My married name is Sykes. I actually sent it to Kirk Sims. Okay. So now I was mortified, guys. And it just shows what kind of person. First of all, Kirk, LOL, laughed and said, yeah, I thought you did do a good job. But
I did. I thought you did a good job. I didn't know you killed it, but I thought you did a good job.
Can you imagine? So, but anyway, forged a great relationship. I have gotten so much great advice, and I'm going to ask him to help us on some of those talking points, but just about, your pitch books and when I could be ready. And so having Kirk as one of your investors or investors to be, when he says he actually helps you, he really does. And so I love that story, because I tell people that story and they just crack up, because I had to actually change your name in my phone because I want to make sure I send you some other crazy stuff. Anyway, so we talked about, Daniel said that you have one of the largest EM programs. It's something to be proud of. It's performed and outperformed year over year. What's going on in the EM space today? Has your pipeline, is it still robust? I mean, there's lots of stuff happening in the market. How are you seeing the EM space, so we just understand as a group what the market looks like?
It's interesting. The space has morphed quite a bit from when I first started. When I first started, it was in the infancy of the private markets revolution. The EM space used to be public markets. It was dominated by fund of funds that was focused on the traditional large cap, mid cap, small cap. And it has been slowly transitioning to now it's dominated by private markets. You see the private equity launches, you see the real estate launches, you see not so much in infrastructure. Infrastructure is still a struggle in some cases to find emerging managers. What you don't see much is the traditional launches in large cap, small cap, mid cap type equities. You are seeing them in hedge funds. So the market itself is morphing. Mm-hmm. Another recent thing that sort of is being mitigated a bit is a couple of years ago, the new launches were primarily venture capital. Venture capital wasn't just private equity. You had venture capital in real estate. You had venture capital in infrastructure. You had venture capital in many places. And that has slowed somewhat as the economic environment has changed because of the ability to raise that capital is becoming more challenged. The traditional spaces of real estate, PE are healthy, but they're challenged as far as that capital still. because there is a, people may have said something about the denominator effect, and you're like, oh, people are just making up excuses. No, it's not making up excuses. The denominator effect is real. If you have a situation where, say in my case, my asset allocation is supposed to be XYZ target, and I'm above that target, then I have no other choice but to lower myself to that target. The only way to lower yourself is to put out less money. So for some asset classes, if you did well, let's say that you did well in 2022. So my program had a positive return in 2022. In general, the market was down in 2022. Well, if I'm positive and the market is down, that pushes me even further above my asset allocation. So you do have plans that are dealing with less capital to put to work, which makes the fundraising environment challenging. But in general, PE, real estate, I believe, are in a healthy state.
Yeah, so I think that when you step back from it, when we have corrections, crises, I also founded Basis in the great financial crisis. It's a different time. There's a lot of opportunity though, but we do have to be mindful of understanding the objectives of whatever plans we're talking to, and making sure that whether it's now or some other time, that we really do understand those dynamics, because I think that many of us can, well, I won't say waste time, but spend time, burn time talking to people who literally don't have any more allocation for you, at least now. And so sometimes that's just waiting and evolving, because that denominator effect can also change.
Indeed.
And so
Indeed.
but that's super important to really understand. I think what you're saying, what I'm hearing, are the allocations. So one of the good questions to ask is, what's your allocation to real estate and how much have you allocated, as opposed to, and literally I would ask that question when I went on my fundraise, to just make sure that, like, if I'm looking for 200 million and you got 20, then there's a problem. So anyway, just hopefully educating folks on that. So what's interesting, you sort of said a couple of things. I heard you say infrastructure.
Mm-hmm.
What are the strategies so infrastructure, folks, digital infrastructure, I think I read that you like, but what are the strategies that you are finding that are the most interesting in sort of a risk-off environment, right? Because I want, for those of you who have these strategies, listen up.
Yeah, so I think that the program is a little bit different in that our risk profile is a little bit different. So we're willing to step into strategies at an earlier stage. Let's just stick to real estate. In real estate, I'm looking at more niche opportunities. The ability to find strong talent is, I think, easier in real estate because there's so many opportunity sets that are just scattered around. And so if we can find an opportunity set that allows us to build a relationship with the expectation to scale, then I'm willing to hear that out. I was talking to someone a couple of weeks ago, and they were talking about the fact that they were stepping into self-storage. Mm-hmm. And I kind of chuckled. I'm like, well, self-storage was 2 years ago for us. We've done it. We moved on, Right. So it's a situation where we are active in being early. We will invest in real estate overseas. We will do joint ventures, which means that we would provide significant amount of capital for you to exercise your expertise. And I feel pretty good that we can find the opportunity sets. The key is, of course, that scale. I keep saying it over and over again, but regretfully, it is incredibly important. If you can only put $200 to $300 million to work in a space, it won't work for a plan the size of TRS. And if I'm having a conversation with you, I would point you to better options for you, because even though Tammy said she doesn't want to use the word waste your time, I will. It's a waste of time for you to expend resources. Say if you can only run 150 million, talking to TRS, you should be talking to another asset allocator that will allow you to be able to fit their check sizes and be able to be comfortable in your space.
No, I think that's great advice. And you heard it here first, ladies and gentlemen, and everyone else. I want to move on to the best way to get in touch with you. And you talked about your partnership on the real estate side with Grosvenor. And I'm here to say that, TRS is my investor through Grosvenor, and it's amazing. I had, my initial investment where I met Kirk with Illinois, but now that he's at TRS, I still have him as an investor. I'm very excited about that. But talk a little bit, if you would, about how to access, TRS and what's the best way, because I think sometimes people get confused. They don't really know what to do or how to get to you or more about the plan.
Yeah, that's a very good question. So in a lot of cases, when there is a partnership, the partner is the primary touch point. For us, given the size of our program and the sheer amount of engagement, you can work directly with me. I am out in the field constantly. I'm at conferences. I'm doing events like this. You can don't hesitate to reach out. My email address is Kirk. The name is right there, kirk.sims@trs.texas.gov. And it allows us to be engaged, because what we're trying to do is, this is a two-way conversation between us and our partner. So it's a conversation between myself and GCM on the opportunity sets. So we don't consider GCM a gatekeeper. I know that term is put out there a lot, but we are actively engaged. So if you see me at an event, have a conversation with me. If you see me and I'm doing a virtual event, don't hesitate to reach out and have a conversation with me. Work through GCM as well. I'm in contact with them every 2 weeks. I'm talking to one of the asset classes that we deal with every couple of weeks. So I think that's the best way to reach out to us.
No, I think that's great. And that's kind of unique, because there are some plans that have fund to funds managers or partners, that there is no access, right? And it's like, don't talk to me. And I do think that you're so present, you're out there. And I do think that, and I can attest to the fact that you do get back to people. Now, you can't expect someone to get back to you, the same day.
Yeah,
Kirk will get back to you. And I think that that commitment to the space, I think is super important. So I'm going to combine some things, because I know we want to get to the questions from the audience, but I want to know the best advice that you would give someone trying to come into the space now, and then maybe, also work in there some things that you see that have been the biggest challenges. So that way folks know, what the do's and don'ts are, and, we can do that together.
Yeah, sure. So let me talk about the challenges first. I think that it's imperative, if you're launching a strategy, that you have the ability to show your skill set in that strategy. Tammy is a perfect example, so she talked about my interest in let's have a conversation, and we had a great conversation. Well, it was a great conversation because she gave me data that I could sink my teeth into immediately. She had done enough work in the spaces that she was going to be focused on, that attribution was there. So it's extremely important that you have that attribution. You have the ability to show that you can put deals in the ground. And it's not enough to put the deal in the ground. You have to be able to show you can put the money in the ground and get it back out. I call it round trips. Yeah. That's the most important thing to me, is the round trip. Because it's great that you can find the deals, but when I make money when you sell what you found. Right. So that's important to me as well, that you show the expertise when you're sitting across from me, where I can actually see deals. I think the advice as far as reaching out and connecting with allocators, et cetera, is know your audience. I've said it before and I'll say it again. You have to know your audience. You have to know if the plan is investing in your space. That's important. And then know your audience to the level of details. So assume if you walk in a room with me, that you can be incredibly sophisticated in your conversation with me about what you're doing, because assume that I have heard what you're doing from some other manager, et cetera, et cetera, et cetera. It's rare for anybody to walk into the room with something brand new. What I'm trying to find out is what differentiates you from the other folks that have walked in and had that conversation with me. So know your audience to the point that, you know, some people you aren't able to go in detail with. But if you have the chance, if you sit there and you pick up on, wait, this person knows what I'm talking about, then that's your moment to shine. That's your moment to say, hey, look, this is why I'm better than everybody else. So know your audience.
That makes a lot of sense. And I think is great advice and wisdom. So that way, if you're out there and you're trying to figure out how to approach an LP, just making sure that you're prepared, making sure that you know your audience, Kirk said, and that you have a track record that you've built that you can point to. So it's not just theoretical. And then understanding that what matters is you know, realizations, and that you actually can prove that you can be stewards of capital and not just get deals and hope for the best, but that you actually have some experience in returning capital, because that's, you know, return of capital, particularly in a risk-off environment like we're in now, people are really focused on that. So you talked about the emerging manager space evolving and the differences, and, you know, what does success look like in the EM program for TRS? What is, you know, what is it? Graduation? Is it returns? Is it, you know, what makes you feel like this is, you know, worth the investment and moving forward for the plan?
Sure. The first thing, of course, is performance. The plan has to generate, the program has to generate alpha for the plan. Thankfully, we have generated positive alpha last year. We're having a good year this year. So that part is important. But then the second part is graduations. And we have actively tried to solve that challenge. Every EM program's challenge is graduation, to move a manager from this pool of capital to the broader trust. And TRS had 7 graduates out of the program through 2020 into 2021. And what we've done is we put a pool of capital together that we call Emerging Manager Select, that allows us to transition the program best performers into this pool of capital. When this pool of capital was put in place, we were able to move managers in. It's driven by the needs of the asset class. So it's not a thing of arbitrary moving a manager from here. It literally is the asset class is saying, I need this. And we're like, we got it. Take a look at it, high performing. By putting that program in place, we have been able to improve our graduates to, in the last year and a half, we've added 5 graduates to the trust. And so I'm excited about that we're now able to have a structural mechanism to help us move graduations from the program into the trust. So success for us is performance. Our number 2 tenet, believe it or not, is diversity. And we are 53% diverse as a program. So over half our capital is dedicated to diverse managers. So we meet that target. And then our third target is graduation. And we've put in a system that allows us to be much more efficient at graduation.
So I love that, because the fact that it's intentional to make sure that the portfolio has diversity, I believe diverse teams outperform, as I know that we all believe that. We've seen that diversity of thought, and it actually is proven in the way your portfolio is operating. It's all about the numbers. Right. And then, you know, I also love the fact that graduation is important. And I've seen, you know, and we won't name names, but I've seen some programs that are really good programs, but they haven't quite thought about the scalability. How do you get out of the program? And you don't want to be trapped in an EM designation. It's a great way to start, but I love the fact that there's a lot of great thought in how to move through the various aspects of it. And that's encouraging, because it's hard, right? It's hard to get capital. And once you get it, you want to figure out how to scale. And as women and people of color having 1.3% of the AUM, scaling is important. And
Yes.
we all know that this is not a fund one and done kind of
No.
business. We're all spending a lot of money. So listen, I don't know where Daniel is, but we're about at our time for just our chat. If you want to open it up for questions, we can do that. Mr. Daniel?
Yes, this was a great discussion. Now, I want the audience, please feel free to raise your hand or type your question in the chat box for Kirk and Tammy.
Looks like we have 3 in there now.
Can we see them? I don't know if I can.
Okay, yes.
Look down.
I received
what?
a question. What's the best mistake you've ever made?
Okay, so I don't know if that's for me, but the best mistake. I don't think I've made a best mistake. I think that this job is very humbling. Is humbling because of the things that you do and the things that you don't do. One of the things that hits me the most is the manager who I'm like, I don't know if that's a good manager. And then that manager kills it. That sticks with me. I'm like, I did something wrong. Something went wrong and I didn't do my job right because I said that wasn't going to work, but that really worked. So what did I do wrong? So I don't think I made a best mistake. I'm constantly always questioning myself, what did I do wrong? Because I passed up on something, so that's what I spend a lot of time thinking about.
I love that answer, and I'll go because we're having fun here. So I have this thing that I say a lot to my children and to even my employees, and we're up to 52 employees. We don't fail, we learn. Okay. And so I actually, when I heard the question, I was just like, of course, we all make mistakes. Everyone makes mistakes, whatever it is, or else we'd be walking around in perfection. And so there are judgments that I've made, whether it's like Kirk said, a deal that I might not have pursued, or a deal that I did pursue and I wish I didn't pursue. That has happened throughout all of our careers. Interacting with people, whether it's a presentation where you felt that you didn't do it as well as you thought you could, and so you step away from it and you don't beat yourself up. You don't fail, you learn. And so I literally, when I mess up or I feel like I could have handled this better, I'm a big believer in EQ, right? You have to care about people, and you have to make sure that, like, when you're talking to people, that you see them, right? And I don't always do that well. I'll be honest. I have a type A personality, and sometimes I'll come at you and then I'm like, you have to make sure that in your role, whatever your role is, that you know how your words may land. You may not mean it that way. And so I work on that every day. So I love that question. Thank you, whoever sent that. Come on, Jamie, you can help us out, because I can't go on the chat and do all this.
Okay, I have it. I'll take care of that area for us. So we have another question from Devon Prelo. He's our president of CURE.
Okay.
His question is, is there a trend you never want to see again?
A trend? Go ahead, Tammy.
I'll go first this time.
Yeah.
So I mean, for me, it's the trend. I looked at the AUM for the last decade of women and people of color through, there's a report on diverse asset management, Dammy's website. And it's the Knight study. It's one of those studies, and it's the most recent Knight Foundation study. And this is real talk, guys. And in the last 10 years, decade, the increase of AUM managed by us is 0.1% more than 10 years ago. 0.1. So now let me ask you something. You step back from that. I'm a numbers girl. If I said to Kirk, I'm going to give you a 0.1% return improvement, you'd be like, get the heck out of here. And so I don't want to see that trend. I don't want to see that over the next 10 years. And, I was on a panel at Grosvenor's conference, and I said that on the panel. I was like, you know what? That means that 98.6%, if we're taking 1.4, is managed by white men. And that's a really hard trend for me. Like, I'm saying to myself, we did all this stuff. And by the way, It's pluses and minuses. So it's not that there's no progress. Don't get me wrong. But that is a trend that I think we should all be focused on. And we should look at that and we should shine a light where that trend is actually someone's bucking the trend. Because TRS, Texas can't do it alone. It's got to be, that number won't move if people, it's a push me, pull me thing. So I don't want to see that trend.
Yeah, I agree with that 100%. I guess I don't see a trend that I don't want to see again. I guess my job is to investigate every opportunity that I see out there. I stay away from trends in general because trends aren't going to wait. The very idea of a trend means it's going to be arbitrage away. You will not make money. So I don't know. Maybe my answer is I avoid all trends and I don't have to worry about them.
He's a trendsetter though, because you're setting trends out here in this.
I don't know. I'm trying. I don't know.
Yeah.
Running fast.
Yes. And I want to talk to both you all, right, about the trends that you all have been setting in diversity. Because Tammy, since I've been here in New York for 10 years, you have been a trailblazer. And Kirk, since I've met you, just learning more about what you've done. 53% is unprecedented. People will brag about, 15%,
Sure.
inclusion, and you're more than triple that, right? Almost, you're going to be 4 times that pretty soon, I foresee. So can you guys just talk about what you guys are doing differently to be intentional about bringing diversity into the space and giving opportunity?
The funny thing is, you don't have to be intentional even. So let me put it like this. I advise a lot of people on emerging manager programs. They reach out to us. They're like, how do you do what you do? How are you guys performing? What have you built, etc. And the first question I ask them is, do you want to build an emerging manager program or do you want to build a diversity program? Because they're not the same. However, I make it clear that if you build an emerging manager program, you should naturally have a tilt toward diversity. Think about the definition of emerging: new launches, young funds, lower AUM. If you don't find diverse candidates in that pool, it's almost impossible for you statistically not to find diverse managers if that's truly your focus. Our job is to give them opportunities. We can find a manager. I'm stunned when anybody tells me that they can't find a manager in the ABC asset class. I'm like, reach out to me. I got a list. I can hit you with it. 5 minutes, you'll find the managers. The key for us is that we find them and then we back them. That's the key for us. So a good emerging manager program should naturally tilt toward diverse managers as just part of the universe that's out there.
No, I agree.
Thank you.
Yeah, and I would just add really quickly because, that's a hard act to follow, but I do think that at the end of the day, it's the power is in your networks. And sometimes it's foreign when you hear people, even to me, saying, I don't know where to find, African-Americans for boards. I don't know where to find African-Americans for jobs. Well, we're 78% women and people of color. So somehow, yes, we certainly are inclusive in our searches, but there's a whole world out there of us. And it bothers me when people will say with a nod to me, well, it's hard to find. I'm like, no, I don't actually. So yeah, we just have to keep pushing, keep, as Kirk said, talking about the issues and making sure that folks know that we're out here. So, Cure doing events like this is really important. And it's really keeping the communication going about our challenges, because to some folks, we don't exist.
Definitely. I definitely want to thank you all, and I want to give you your flowers today because of what you guys have done in a track record. It's really remarkable. We have a question that's come in from another one of our board members, Renee Hamilton. For Kirk, I was surprised to hear you'd say TRS invest internationally. Can you share some of those investments and what made them attractive?
Sure. So in some places, I mean, this is primarily in Europe that we've made these investments. You could say Europe in some ways think of storage, is 3 to 4 years behind us. Because of, if you think of the digital transformation, or you think of the Amazon, you think of the last mile, you think of these type of things, it's taken a while to get as embedded over there as it is here. So what we see is opportunity sets that are slowly being arbitraged away here in the US are still there in Europe. So something as simple as like outdoor storage. Well, we know Amazon has to park a whole bunch of trucks someplace here in the US, right? Well, guess what? As Amazon builds out its presence in Spain, Amazon has to park a whole bunch of trucks someplace. But they're not used to having to worry about where's Amazon going to park all those trucks. And it gives you a better opportunity set. So I think that for us, we step overseas in real estate because of returns that have not been arbitraged away.
Okay, thank you. We have a question from Stephanie Fowler. What characteristics do you believe are critical to success as an asset allocator?
Very good question. Curiosity, I think, is really, really important. When my son was younger, when he actually cared what I did, not as a teenager where he doesn't care, he asked me once, he's like, "Daddy, what do you do?" And I said, "You know what? Think of me as a detective, always trying to figure out what's really happening, what's really going on." So curiosity is I think really important, that I get excited from manager meetings. I really do. I enjoy manager meetings because if I can find something early, if I can find something new that will give us a chance to have a leg up in this race, I get excited about that. So if you lose that curiosity, it's kind of mundane, and it's hard to find that new thing, that thing that says, okay, here, this is a perfect example. Everybody talks about the behemoths that are out there now, the BlackRocks, the Blackstones, the et cetera. They all started someplace where they were knocking on doors, just like everybody here, trying to get capital. They may have had certain other advantages, but the fact of the matter is they were somebody's risk at some point. That's curiosity, willing to take a chance. So I like that. I like the ability to try to find something new.
Okay, thanks. We have another question from Leonard Allen Smith. What aspects of a fund manager's business operations or back office is most important to you?
Tammy, you want to talk about your history of having those ODD conversations?
Yeah. So I think when you're going out to get LP or institutional capital, I think we started to talk about this a little bit. You have to have deals and a track record. But what I see, I've actually been mentoring a number of early stage fund managers, and I'm super excited to do that, is just not understanding that you have to build your house. And if you get the capital, you have to be able to say, here's a scalable core team model, which is one we use to basically say, we have our main disciplines, and then we'll scale up under those disciplines. But you need infrastructure. You need to understand that for your LPs, having reporting, having risk management, accounting, treasury, IT, HR, those DDQs, due diligence questionnaires, are pages and pages long, and they're helping the LP to understand where are the risks in this manager. Like when Kirk says I'm a detective, they're looking to say they're underwriting us, right? So whereas we're underwriting deals, they're underwriting us, and they're saying, what are the issues? And one of the positive things, and this is something that Kirk helped me with that I hope you guys will embrace, is that you can talk to your LPs or future LPs, and they'll tell you. I did a listening tour before I actually went out on the road, because I don't like to waste money, and I like to know what my own, how basis is my firm's risks were perceived. And so I would encourage everyone to go and listen, show your stuff. And the LP, Kirk will tell you, listen, I see that you don't, how are you going to report? Do you have a reporting, whatever it is? How do you have a track record? Those are the things that are important. And so it's kind of the field of dreams. My approach was trying to build something because of my institutional background prior to becoming an entrepreneur, because I understood that you have to be ready to go out there and answer those questions. And so I think what people sometimes don't understand is that it's not just, you're not out there as like, an acquisition person doing deals if you don't have the rest of it. And that's the place where I see many of us struggle.
Yeah, I agree with that 100%. The infrastructure is key to us. We will give you runway though. The expectations that I had for Tammy at Fund 1 is not the same expectations I would have for her at Fund 4. The simple fact that she's at 52 people. She was not at 52 people when we had our conversations. We give our managers runway, which means I'm going to tell you at Fund 1, I expect A, B, C, D. But then I'm also going to tell you at Fund 4, I expect A, B, C, D plus. And the key is the plus. What I hope is that I don't have to tell you. That makes it even better. If you come to me with your vision of saying, hey, look, I am doing Fund 1, and this is where I am in my life cycle. But by the time I get to Fund 4, I expect ABC to be in place. You are a leg up on 90% of the conversations that I have. And that is really important because part of once I'm looking at is where is that vision? Where are you looking beyond just today? Because I'm not looking at today. I'm looking at where can you go in the future. So operations is extremely important. Tammy laid out the stuff that she has had to deal with, but part of it is also knowing when you're going to put certain things in place.
Definitely. Thank you. Thank you for that. And I do have another question around just applying for the program that you mentioned, because I know you mentioned people can contact you, but are there additional steps that they should do to better understand what you're expecting to see when they come to you and reach out to you, and how to apply to participate in the program?
Sure. Send me your pitch book. I'll take a look at your pitch book. I'll give you some feedback on the pitch book, depending on where you are in your life cycle. The key for me is fit. Do we have that type of exposure already? Do I want more of that exposure? Be aware that these conversations could take a long time. I've talked to people for 4 or 5 years before I actually put capital to work. But yeah, reach out with your marketing material. You can reach out to me. You can reach out to GCM. If you reach out to me and it's something that I think has something that we should at least keep on the radar, I'll connect you to GCM. So you'll become part of their radar as well. But I'm pretty candid up when I'm looking at stuff, if it fits or not. And I think that's fair to you as an investment professional, that I don't waste your time. So if it's something that won't fit, I'll tell you, that's not something that we're doing. And then it frees you up to move on. Always check back. Things change. 2 years down the road, it may be something I am doing. But yeah, reach out via the email. Happy to take a look at your materials. And then if anything's possible to go from there, I'll let you know. If not, I'll let you know.
Okay, thank you. And also in regards to the profiles of the investments that successful managers are making right now, what are the real estate asset classes that you guys are high on at this point in time? I know you mentioned you guys were looking at storage a couple of years ago. What are you looking at now?
Looking at pretty much everything. I think the key is a return target. I'm not core and I'm not core plus. I'm value add and I'm mostly opportunistic, to be honest. So I'm pushing further out on that return spectrum. So not doing office, not doing retail, selectively looking at multifamily. With that, it's hard to describe because I other than the things I'm not looking at,
Mhm.
everything else is open. And then honestly, like data centers for a while back were like, okay, everybody wants a data center. Nah, I'm not really looking at data center. Life science was the thing a while back. I'm not really looking at life science. I mean, it's more open-ended. We invest in diversified managers. We will JV for specific structures. Most of our funds are diversified, meaning that they have the ability to be opportunistic. We know where they're going to play, but we're happy with where they're playing and they're opportunistic in that space. Most of our JVs are specific. That means that manager has to put the capital to work in this particular area because that's what we have determined is their area of expertise. So yeah, I don't have anything that I could say, yeah, this is hot for us. It's never that. It's more of what is the return profile and can you scale it?
And,
Okay,
and I would
definitely.
just add from a diversified manager of debt and equity and just all of my LPs, I agree with everything Kirk said, but I do think that there's a focus on office to resi conversion. People are looking at single family rental. People are looking at limited service hotels that are actually transitional housing, believe it or not, that actually outperform all hotels. Office is a negative, but except for the conversion part. Industrial, if you can find it. And then I think in terms of like build to core plus or opportunistic getting development deals, we've been looking at a lot of those opportunities that will deliver post this, hopefully what is this mini bank crisis recession. As Kirk said, it's trying to be creative about putting capital out, but recognizing that we're in a higher interest rate environment versus the last decade with inflation. The inflation report was good. This, I think, came out yesterday, but not quite good enough. But, cap rates and where there's capitulation between buyers and sellers across asset classes is really tough. If you don't have to sell, you are not selling. And so on our equity side, we're being really creative, but we're actually leaning back a little bit because, no one wants to rush out there. And then there's, 1.5 trillion of loans maturing in the next 2 years. And there will be distress because unless interest rates come back down, but there's really not a realization that where people want to sell at deep discounts yet. So I would say this is where basis, lean in when others will not, right? That's where the opportunities are. And I'm praying that like there'll be managers that come out of this crisis to say, you know what, I understand that there will be these distressed opportunities. I think there'll be situational distress. The other thing that's been interesting to us is 10,000 people are turning 65 every day for the next 10 years. The baby boomers are getting old and the assets are transitioning, senior living, all those types of things. And so I just gave you our whole game plan. So you have it on recording. No, but we're looking at all those different things. So I share all of that to say that there are opportunities. And if you are, an expert in one or understand some of those dynamics, it really is following some of what the bank stuff and where there are, places, demographics that are stronger. And so it's not easy today, but I do think that there are opportunities.
Yeah, everything that Tammy just mentioned, except build the core stuff that's come across our desk, and we've taken a look at it. It is some things, like I said, we may have actually been early in, but we're opportunistic. We're always opportunistic. So if the strategy resonates with us where it can get the AUM target, obviously, if I'm value add opportunistic, that means my AUM target, my IRR target is a little bit higher. If it can hit those targets, we'll have a conversation.
Okay. Yeah, definitely. And Tammy, I do want to, put the spotlight a little bit on basis, and I have a question for you because both of you all provide opportunities, right? And so, can you give us a little bit about the typical profile of an investment that your firm makes?
Absolutely. So we are middle market focused, both on the debt and equity side. So that means smaller check sizes. I would say on our credit side, the smallest check is probably like 5 million of, equity. It could be preferred equity or structured equity, all the way up to, our biggest preferred equity deal in Fund 2 that we actually had a co-invest partner with. was 140 million, and it was on a 600 unit ground up development in Jamaica, Queens, where I grew up. I'm a Queens girl. And it's in a phenomenal location where other institutional capital is there, but it's a location that I actually walk past every day on my way to school, which is like, imagine that come full circle story growing up in the projects in Queens. So middle market check sizes, again, invest in bridge debt, mezz debt, preferred equity, structured equity. Our equity side does LP equity, as well as financial GP from time to time. So we won't be on the guarantees, but we will work with certain of our sponsors if they need some GP help, and we may be GP LP. And I would say on the equity side, similar check size, 5 to 30 million on the equity side, a little bit smaller. And we have plenty of capital. I have to tell you that, on our equity side, TRS is one of our investors through Grosvenor. We just closed a fund really a year ago was our final close, believe it or not. And we closed at 832 million. And that gives us, with some leverage, about $1.5 billion. We're on track to deploy that in our investment period or sooner. So we have a lot of capital, and we are definitely trying to provide access to capital, which is why after this amazing event, I'm on my way to Newark to speak to 75 diverse sponsors, developers and owners in the area, so we can help them get access to capital and talk about challenges. And we're partnering with a NJCC, which is a CDFI in the area, community and Burnell Hall is the CEO. And so Basis likes those kinds of partnerships. And so, if you need debt, call us, because we will tell you, like Kirk, we may not be we're not an LP at the pension fund, but we do have capital for debt, and we'll tell you if we can't do it. And we may know someone who can. The other thing I'll quickly say is we're the first Black and female owned firm to have an agency license. We have a Fannie Mae license and a Freddie Mac license, which means we are writing loans that are in the affordable and workforce housing space, which is near and dear to my heart. I grew up in the projects, and to be able to help folks get capital and navigate that. And those loans can be as small as $1 million all the way up to 200 million. And so that's a new license for us. And we're the only Black firm that has a license right now, Black owned and led firm. And that's how big the agency business is. So the three platforms, think about debt across the capital stack, agency, and equity. And we're pretty excited about being diversified, because we talked about wanting to scale. We need to have a diverse firm actually really scale like some of the behemoths that Kirk mentioned.
You know what? Before we leave, I want to give a shout out to what Tammy has accomplished. So I don't think that, she is modest, despite the sheer amount of stuff that she's just said she's doing. I consider this the example of how to build a successful firm.
Well, that means the world to me.
Well, no, because I'm being honest. If you, as a trying to start a new firm, entrepreneur, find out what Tammy's done. Find out how she's built a team. Find out how she built a track record. Find out how she's dealt with being told no repeatedly to the point that she's at right now. Because I think that is it. There's a few success stories here. You hear about some of the other ones, but I consider Tammy a beautiful example of what you can do if you structure something right and you build it. Capital will find you.
Thank you. So we're at
Kirk, you may have given us the idea for the next Fireside Chat, right?
Okay, roll with it.
Me. We'll start with it.
Definitely, but we're at time. I know, Tammy, you have another event. And Kirk, I just want to thank you. You were a man of your word. I have a Kirk event story as well. We met at a finance event here in New York City. And I told him about the organization that I'm a part of. He said he would be here. And guess what? He's here imparting his priceless knowledge to us.
He's man of his word.
That's right.
Thank you guys for having me.
Appreciate it all.
Thank you all so much for joining.
Have a great evening.
You too.
Bye.
Thanks.
Bye.
Good night.